Good day, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for Tuesday, the 16th of January, 2024, and we're about 7 p.m. Central Time. I'm sorry for this morning not putting out an update for everybody the first thing in the morning. I lost electricity. It has thrown my whole day off. For hours, I had no electricity, so my whole day got crunched. I missed putting out my normal updates on time. I had a webinar I was panicking on. By the way, we had, I think, a record amount of attendees today for it. It was just phenomenal in terms of the size and how much we got done. And I was panicking. I was saying I got to write everybody an email if we don't get the electricity back. And it wasn't, 10 minutes, they'll have it up. House got cold, everything going on. And that brings up something to me that I want to tell you. You know, here we are, the very beginning of January, and I have bragged all year. I said, subscribe. It's the price of a coffee, if you go and you subscribe to 30 days of my subscription. If you do, I think you'll fall in love with what you see in the morning subscriber videos. Well, so January 11th, I went online to see what coffee costs. In Chicago, by my house, I went by zip code. $4.08 for a Starbucks large. That's just plain black coffee. Pete's, $4.13. Dunkin' Donuts, $3.56. You know you're going to leave a tip, right? If you don't even go in these places. Don't embarrass yourself. The kids deserve it. Futures, no tip. $3.98 for 30 days. It's a special for 3 days. I want to prove my point to you. So if you just go to our website, iraepstein.com, go to research, subscribe. That's what it's going to be. If you do the Spider ETF, I've cut the price of that in half to $4.48. After you're a member, you can go in and adjust your subscriptions any way you want. At the end of 30 days from when you subscribe, it will revert to a full subscription. You can cancel it. You can do what you want. You can add to it. That's it. Don't be a wise guy and think I have a morning future subscription. I'm going to cancel it and then I'll repurchase it and I'll only have to pay you $3.98. You won't get anything because I won't do that. The same on the Spider. But if you're a current subscriber and you're one of the two of these and you want to add one of these, go on and do it, and I'll honor that price for the 30 days. Simple enough. iraepstein.com. You can move your cursor to the top here. It'll go that way as well. If you're on my mailing list, I'll mail you something on it as well. Okay? I hope you take advantage because these are great prices and a way for you to see what's happening. Are there a lot of setups right now in the markets? Frankly, there aren't. What's happened is that we're just finished the caucus. It appears that it's a three-person race in the Republican Party, Biden, Haley, and Trump. Trump still trouncing everybody. But as we move on now and we get to New Hampshire and so on, the question is, can anybody really close the gap with Trump and do something about that? That's the big story. Then we'll hear about for months who stacks up the best against Biden. Nikki Haley said she will not go into one-on-one debates any longer with DeSantis. I think she's right. She said everything she possibly can. Now it's time for the people to choose. But she's willing to debate one-on-one with Biden. He won't do that. Or Trump. He has nothing to gain by doing that. So this is where you're stuck right now. So we'll see where the chips start falling. As for the other contenders, bye, Miss American Pie. They're over. Ramaswamy can stay in there because he has enough money. He's not your next president. So MESH, you do see the sideways action that we're getting right here. The pattern is one of a higher high and a lower low, no trend temporarily, fighting at the 18-day average. Now, the pattern has been that you had this rally from the end of October, you rallied right into the end of the year, and now you've stalled. You had a correction right at the first week of the year, you pulled back up, and you're stalled out as the market's looking and saying to itself, what next? What do I do? It hasn't made up its mind. It's very clear. When you look at the Bollinger Bands, you can see how narrow the bands are getting right here. You're overbought in the market. I don't see anything there. When we step to the NASDAQ, it would take the market getting over Friday's highs to keep an attempt at a further rally that might get to 17,271. There's nothing on the current pattern that can turn the chart bearish, and it seems to just be stuck in an overbought condition. In the Dow, you're down to the lower Bollinger Band. I would think that's where the market's going to look for support. It's already getting itself an oversold condition, but support is very different than saying, hey, use a bounce to get short or use this break to get long. Neither are there. This is about as neutral as I've seen it. The market that's still bearish is the Russell, but it's too oversold for me to tell clients of mine, at least, deploy new cash. But it is the bear market. It is the one that's weak. When we look at the 10-year notes, sideways action that had a bounce to the 18-day average for 3 days and now has slipped back at this point in time. You're fighting a battle in the 5-year, not able to get itself going one way or the other just yet. No trend. Higher high, lower and low. This is a very typical pattern right now. The dollar stepped out today. I think the dollar looked at all that's going on in the Mideast, got nervous. I think the dollar is looking at so many of our Fed governors coming out and going and saying they're not ready for that cut. That doesn't mean they won't be ready come March. They want to see the data, as I have consistently said. It's too soon to say we're going to move in March. That simple. We have 2 more jobs reports, 2 more CPIs, 2 more PPIs, 2 PCEs coming out yet. There's an awful lot of data we have to deal with, not to mention the weekly jobless claims, continuing claims. You're not there yet. And you're seeing that. So why did this jump? I think world events are making it jump. Nervousness about what's going on in the Mideast could be one of the things. Nervousness that you won't get any rate cuts, and that gives the dollar a bid compared to some of the other currencies. Speaking of other currencies, you fell apart in the euro currency today. That was a big break in this market. For a nothing day, all of a sudden you were down nearly a full percentage point, down 90 points. Now, part of the reason is out of the dollar, and I've tried my best to explain this to everybody, the euros comprise 40% of the dollar weighting. So when it goes up 96 points, it's going to drop proportionately. British pound, down to the lower Bollinger Band. There's lots of questions what's going to happen. Mr. Sunak's government there is seeing departures all of a sudden. He's not looking good in the polls. You're caught in the sideways action. You're in no man's land right there. If you're trying to make something out of nothing, you're succeeding because there's nothing really here. Same thing in Bitcoin. Higher high and low. When the market was up here last week, I came out and I told all of my clients that were in what we call a concept trade of buying the market. Actually, they were in at around 38,000. They got out of part of it on the first challenge of the 44,000 zone. And then when it hit 48, when the first day it came out on X, remember that rumor? And it only went to 48 and a fraction on the way back up. 2 days later, I told people, get out. I said, I don't care what the ETFs do. It's discounted. And boom, you have dropped back $8,000. So discount happens once. Now game has to prove itself. In Brent versus WTI, I fully understand this moving forward because all the oil in the Red Sea is under attack one way or the other. When we look at Brent here, not Brent, but WTI, you're fighting a battle for support at the 18-day average, but to buy the market against 78.06 and put stops back under this low, you're talking way too much money to risk. There's no edge here, and the market is faltering at the 200-day average in gray. I don't have a sell signal, but buying it makes no sense on that type of chart pattern. When we, by the way, this one was the Brent. I just want to be certain of what I'm saying. If I said WTI, I apologize. Let me get over here. WTI oil, I know my whole day screwed up since that electric issue, is under the 18-day average, and it too. You're going to buy it at 72, 77 and put a stop near 70? Got better things to do than that. Heating oil, natural gas. You've had the cold weather. Behind cold weather comes warmer weather. Doesn't stay cold indefinitely. You got up there last week. Today you gave it back a chunk. Why not? You got your sub-zero. You got your Arctic blast. We're already talking in Chicago 10 days out that they think we're going to be above normal temperatures. I woke up this morning, no wind chill. I think we were 5 below when I was looking at it. I know I lost all my heat and everything, so that's what went on there. It wasn't our house fault. We lost electricity. Lower highs, lower lows. You can see how the market's just battling at the 18-day average. I have said this market's oversupplied. You had your first winter storm. Now I'm looking for setups that potentially get bearish, believe it or not. So again, one last time, IraEpstein.com. Go to research for the price of coffee, 1 cup, which will be out of your system in 24 hours. You're going to get 30 days of either my morning futures and or my morning spider ETF. They won't be out of your body right away. And maybe you learn something. Maybe you get some trading ideas. IraEpstein.com under the word research. You got it right there. If you have questions, you can always call my staff. I'm Ira. Take care.